I found the next NVIDIA. And if you're not paying attention right now, you're going to miss the biggest wealth transfer since Tesla flipped the script on the auto industry. The market is hot, it's volatile, but it's full of opportunity. And if you ride this wave correctly, your bank account might just look unrecognizable in a few months. We're not just buying stocks here. We are entering wealth vehicles. And today, I'm revealing 5 high-conviction stocks I'm personally buying right now. Stocks that I believe are going to make people embarrassingly rich if they play it right. Let's start with the first one, and it's a banger. AMD Advanced Micro Devices. AMD is on an absolute tear right now. I've been calling it out for months, and the breakout is finally here. In the last 6 months, AMD is up about 30%. That's not random. That's momentum. That's fundamentals finally catching fire. But what's more important than what AMD has done is what it's about to do. 1-year chart still down, which means we're still early. And that's the game, being early. This is a $250 billion company, but I believe it's heading to $500 billion and beyond. And I don't just say that to hype you up. I've done the research. Their AI roadmap is out. Their profitability outlook is stunning. And they're finally launching chips that go toe-to-toe with NVIDIA. You've heard of NVIDIA's H100 chips, right? Well, AMD's MI350 and upcoming MI400 chips are changing the game. The MI400, according to AMD, will be 10 times more powerful than its predecessor. 10 times. Not 10%, not 20%. 10 times. That's an exponential jump that could flip the entire AI hardware market on its head. And if AMD keeps undercutting NVIDIA on price with comparable power, guess who's going to win the next round of AI infrastructure contracts? Meta, Google, Microsoft, Amazon. These guys need AI chips in bulk. And if AMD is offering firepower for a fraction of the cost, you think they're not going to start shifting orders? These aren't dumb companies. They're ruthlessly efficient. If AMD delivers, the floodgates open. Let me be clear, NVIDIA is still the top dog. I've made a lot of money off NVIDIA, but AMD is the underdog with a real shot. It's like Tesla when everyone was still laughing. That phase is over, and the breakout has begun. They're going to be powering the backbone of AI infrastructure in a way that gives you massive upside. And this isn't financial advice. I'm just showing you what I'm doing. Always do your own research and make decisions based on your own goals. But if you want my exact strategy for finding these 100x stocks early, I made something for you. I put together my most powerful document ever, the secret formula to find 100x stocks. This isn't fluff. It's the actual process I use to uncover under-the-radar rockets before they take off. It's already helped thousands of people find life-changing trades. And for a limited time, you can get 10% off using the code GAINVERSE. Link is in the pinned comment. Do not miss it. You're going to be kicking yourself if you come back to this video in 6 months and see AMD at 200 plus. Also, while you're at it, Webull is giving away 10 free stocks worth up to $3,000 when you deposit just $100. That's basically free money. I use Webull for charting and short-term trades. It's one of my top tools. Grab your free stocks now. Links in the description and pinned comment. Don't sleep. Now, let's keep it rolling. The second stock I'm buying, Robinhood. Now, before you roll your eyes, let me explain. Robinhood isn't just the meme brokerage anymore. This company is quietly becoming a fintech beast. And the numbers don't lie. The market cap just passed $87 billion. And based on current momentum, I think we're headed to $100 billion within weeks, not years. This is a classic momentum meets fundamentals play. They've built multiple streams of income, and they are scaling like crazy. Here's what most people don't realize. Robinhood is expanding globally fast. They used to operate in just 6 countries. That's it. Now they're launching in the UK, Germany, France, and the momentum is ridiculous. Western markets, high GDP, high trading activity. You want that exposure. More trading volume equals more revenue. Robinhood gets paid on order flow, fees, crypto, margin, interest, you name it. In bull markets, they print money. In sideways markets, they still print. They don't need to be the biggest portfolio holder. They're the picks and shovels play. They win no matter who's winning the trades. And that's genius. Think about this. When Bitcoin spikes or tanks, people trade more. And Robinhood makes money on every click. And here's the kicker. Most users still think it's a free app. That's the magic. The monetization is invisible to most users, but very real on the back end. They make money on options, crypto, even uninvested cash. Crypto is huge for Robinhood right now. As Bitcoin flirts with $120,000, volume is surging. And Robinhood is scooping up revenue without even holding the underlying tokens. They're offering the rails. They're the infrastructure play. Just like AMD is for AI, Robinhood is for retail investing. This is why I'm loading up. Look, I've worked with quant firms. I've been on the floor of the New York Stock Exchange. I've seen what real opportunity looks like. And this stock has the pattern. The technicals are confirming it. The expansion plan is confirming it. And the user base is hungry. And both of them have room to run fast. But we're just getting started because the third stock I'm buying right now is Coinbase. Yep, Coin. And listen, I know what you're thinking. Isn't Coinbase already up big? Yeah, it is. But you want to know what else is up? The crypto market. And it's not done. We are entering a new crypto cycle. This is not speculation anymore. This is structural growth. Bitcoin is pushing $120,000. Ethereum is running, and altcoins are next. Now let's zoom in. Coinbase isn't just a crypto trading app. That's what everyone thought in 2020. But Coinbase today, it's a full-stack financial infrastructure company, and they are the backbone of institutional crypto adoption. Let me say that again. The backbone Coinbase is running custody and trade settlement for some of the biggest institutions on Earth, including BlackRock, CK, Fidelity, and major ETFs that are now entering the market. We're talking about trillion-dollar asset managers partnering with Coinbase behind the scenes. And when the money comes in, and it is coming, Coinbase is the gatekeeper. Retail trades, they take a slice. Institutional trades, bigger slice. Staking, slice. Custody, slice. NFTs, DeFi, on-chain analytics, slice, slice, slice. They get paid on the entire crypto ecosystem. Now here's the beauty. When crypto goes up, everyone FOMOs back in. Volume explodes. And Coinbase doesn't even need to hold the tokens themselves. They're the exchange, the facilitator, the picks and shovels again. Remember the gold rush? People who sold the picks made the real money. That's Coinbase. Coinbase is still under $100 billion market cap. Do you realize how small that is in comparison to the trillions moving into crypto infrastructure? This is like buying Amazon in the early e-commerce days. Not the exact same business model, but the same dynamic. Dominant infrastructure play, unstoppable tailwind. Every Bitcoin pump, every Ethereum fork, every ETF approval, it's all bullish for Coinbase. And if Bitcoin hits $150,000, like I think it will by 2026, Coinbase is going to be printing so much revenue, it's going to look like a money glitch. And even if crypto chops sideways, volatility alone is a revenue driver for them. Volume is their fuel. They don't need a bull market to make money. They just need attention. And attention is coming back to crypto in a tidal wave. So for me, this is a no-brainer, not financial advice. But this is how I'm positioning stacking shares, selling puts, and building core exposure for the long term. And again, if you want to learn how I actually find these before they explode, not after, you need to get my secret formula to find 100x stocks. This is the same formula that helped me get in early on Tesla, Palantir, SoFi, and others before they took off. The document is in the pinned comment. Use code GAINVERSE for 10% off while it's still active. It's a limited time thing and people are eating it up, so don't wait, just grab it. Also, while we're at it, don't forget your 10 free stocks from Webull. Yes, literally 10, worth up to $3,000 when you deposit just $100. That's the easiest trade you'll ever make. Links in the description and pinned comment. Click it. Deposit. Boom. Free stocks. Let's go into stock number 4. And I need you to open your mind on this one because the mainstream financial media, they're completely ignoring it. But I'm not. I've made 6 figures off this company in the past, and I believe it's about to rise from the ashes. The stock NIO is the Chinese EV maker that I believe is about to have a major comeback moment. Now, before you panic and say, China bad or whatever media headline you've been fed, let's slow down. Yes, there are macro risks. Yes, China's consumer economy has been sluggish. But let me explain why I'm bullish on NIO right now. Number 1, battery swap tech. NIO is the only EV company in the world that has scaled battery swapping to this level. Over 2,300 active battery swap stations across China. And each swap takes under 5 minutes. 5 minutes. Think about that. Faster than filling up your gas tank. You pull in, battery out, fresh one in, and you're gone. It's EV ownership without the wait. But here's the real game-changer. Battery as a service. Just like software as a service, SAS transformed tech company profits into recurring revenue machines. Battery as a service does the same for an IO. You don't buy the battery, you lease it. Cheaper upfront for the customer, long-term cash flow for an IO. This is genius. It lowers the price of their vehicles, increases adoption, and locks customers into their ecosystem. Once you're driving a NIO, you're in the loop. You're on the subscription. And if you think subscriptions can't drive stock price, go check how Netflix built a $1 trillion business. And NIO is vertically integrated. They're not just assembling cars. They're developing in-house chips, advanced autonomous driving software, and full smart cabin systems. That's Tesla-level innovation. And they're expanding into Europe, Norway, Germany, Netherlands, Sweden. Plus, Eastern Europe is slowly becoming a buyer of Chinese EVs. It's a quiet revolution happening right under your nose. Now I know the stock's at $4. That's exactly why I'm loading up. Because when it was $40, everyone was in love. When it dropped, everyone ran away. But value is created in the shadows, not in the spotlight. And the momentum is finally building again. Technically, we're bouncing. Fundamentally, the risk-reward is explosive. Yes, I manage my risk. Yes, I use options. Yes, I hedge. I'm not reckless. But when I see a play like this with macro headwinds starting to ease, government support for domestic EVs ramping up, and a company with real infrastructure built and ready eyes size inch, the Chinese government isn't going to let NIO die. They've publicly called EVs a strategic priority. Subsidies are back, and NIO is one of the poster children. They're not just a car company. They're a state-backed tech weapon. You have to look at the whole picture here. If you're only looking at the headline risk, you're missing the asymmetric opportunity. NIO has the tech, the expansion, the recurring revenue model, and the first-mover advantage in battery swapping. I've made money on this stock before. I will again. So, what do we have so far? We've got AMD riding the AI boom and undercutting NVIDIA, Robinhood printing cash off retail trading and expanding globally, Coinbase, the backbone of crypto infrastructure as the entire asset class explodes, and NIO, a dirt-cheap EV disruptor with a business model most people don't even understand yet. And we're still not done, so we've hit 4 heavy hitters. Stocks with momentum, stocks with catalysts, stocks that could 5x, 10x, even 20x in the next market cycle. But the final one, stock number 5, is different. It's already raining cash. It's already profitable. And yet, almost nobody is watching it. This is my sleeper fintech killer, a stock that the institutions are quietly accumulating while retail snoozes. But I'm not sleeping. I'm stacking. I'm locked in. The stock, New Holdings, ticker symbol NU. Now, you're either nodding like, yeah, I've heard of that, or you're sitting there like, new what? Let me wake you up. New Holdings is a digital bank, but not just any digital bank. This is the largest neobank in Latin America with over 100 million customers. That's more than PayPal, more than Cash App, more than SoFi, more than Robinhood. Let that sink in. It's not a startup. It's a financial super app in full beast mode, and it's growing like a rocket ship. They're operating primarily in Brazil, Mexico, and Colombia. Markets with young mobile-first populations, weak traditional banking infrastructure, and massive demand for low-cost, user-friendly financial services. People are ditching the old brick-and-mortar banks and jumping straight to NU. It's like watching the smartphone boom in real time, but for money. And guess who's been backing them for years? Warren Buffett. Yeah, that Warren Buffett. The same guy who never buys fintech. The same guy who preaches against unprofitable growth companies. He bought NU stock personally through Berkshire. Not once, not twice, multiple times. And he's still holding. That should tell you something. Now, here's the killer stat. NU is adding over 5 million new users every quarter. That's insane. Most U.S. banks would sacrifice their CEO for that kind of growth. But NU is doing it consistently, organically, with almost no customer acquisition cost. Why? Because people love the product. It's fast, it's sleek, it works. You open an account in minutes, get a digital card instantly, and start earning yield, managing expenses, or getting credit, all from one app. And they're not just growing users, they're growing revenue. NU just smashed earnings again. Over 70% year-over-year revenue growth. Profitable, cash flow positive, net income rising every quarter. They're executing like a Silicon Valley company, but making money like a Wall Street bank. You know what that means? Valuation expansion. Wall Street loves profitable growth. And NU is the definition. We're talking about a company with over $2 billion in net cash, no real debt, and explosive upside in untapped markets. The average Brazilian still doesn't have access to proper credit. The average Mexican still deals with insane fees from legacy banks. NU is solving that and getting paid every step of the way. And they're launching new products, insurance, investments, loans, cross-border payments, all within the same ecosystem. This is the Apple of Latin American finance. Simple, clean, sticky, dominant. And here's the real kicker. The stock is still under $15. You tell me where you can find a profitable, fast-growing, Buffett-backed fintech juggernaut at that price. You can't. This is a generational setup and I'm not waiting around. I've been scooping this thing up all year. Again, not financial advice. I don't know your risk tolerance, but I do know mine. And I want asymmetric bets in companies with massive TAM, superior product, and accelerating fundamentals. NU checks every single box. I believe it can go to 50 plus in the next cycle and higher if they execute in Argentina or scale their investment products globally. Now, before I wrap this up, I want to make sure you don't miss this. I've dropped the link in the pinned comment for Robinhood's bonus, and it's a steal. Deposit just $1 and get up to $200 in free stock. Yes, $1. That's it. You don't even have to buy anything. Just deposit and claim. Could be Tesla, could be Apple. It's random, but it's real, and it's instant. Free money. Link is below. Don't miss that. Also, if you haven't grabbed it already, the secret formula to find 100x stocks is in the same pinned comment. It's not hype. It's the exact formula I use to uncover stocks before they explode, step by step. It's how I found Palantir at $8. It's how I spotted Coinbase before the ETF boom. If you're serious about making big moves in this market, this is the blueprint. Use code GAINVERSE for 10% off while it's active. You'll make that back on your next winning trade. Probably 10 times over. And I know what some of you are thinking right now. Is it too late? Let me be 100% clear. No. The biggest mistake investors make is waiting for confirmation, waiting for the headlines, waiting for CNBC to say it's safe now. But by then, the 5x is already gone. The parabolic run is already over. You don't make generational wealth by waiting. You make it by positioning early, by doing the homework, and by moving before the crowd wakes up. This is your moment. Get your strategy dialed in. Grab the tools. Grab the free stocks. Get the formula and get in the game. Because the people who act now, they're the ones who look back in a few years and say, "That video changed everything. Let's make this decade yours." Like and subscribe if you want more. Share this with someone who's sleeping on their potential.